Yes, here we are. Here we are. Now, number one, it says paid 3,890 to NISA Institute with a business check for the owner's son's studies. Owner's son's studies. It means that this is a personal use, meaning that now the drawings will be affected and also the bank will be affected. So the funds of the business are going away. So the owner is using the money of the business. Okay, let's go then. So first of all, I would like us to do this here. So debit and credit. So the account to be debited, it will be drawings. That's right, the drawings. And the account to be credited, it will be bank. Now, even if you can write a thing there and say account to be debited, it will be drawings. Then account to be credited, it will be bank. Then the amount of money we are given is to be 3,890 on this side. And remember, when you write here under assets, we are going to write negative here because the amount is going out of the business. So the bank is decreasing. It's an asset. Then here at the same time, we are going to have drawings here 3,890. So at the same time here, the bank, the drawings are also decreasing our equity. Then you are done with this one. If they were saying that we must open up an account, you are gonna say, let's say that you're having bank here. Gonna say bank, then debit and credit. Then on the credit side, on the credit side, we are going to say 3,890. Then for the drawings, gonna say just drawings there. Drawings. Then we're having drawings. They decrease on the debit side, interest on the debit side, and interest on this side. So we are going to have 3,890. But now when you record this thing on the equity section, you have to record it on the as a negative balance. But by nature, expenses, they interest on the debit side and interest on the credit side. Okay, that's how it is there. Then you are done with this transaction there. Okay, let's go to the next question. Okay, let's come to this question. This question says K Lupi, remember it's our data. K Lupi, who owed 7.8, paid 73.50. Remember, K Lupi is paying the less money that he owed, on 15 March 2015 in full settlement of his account. His account was 7.8. The check was returned on 3 April 2017, marked RD. No entries have been made in the books or on the books to record the check returned. RD means unpaid, right? Meaning that there is an insufficient fund in the bank. That's why it is marked RD. Whenever a check is marked RD, it means that the check has insufficient fund, or the check was not signed, by the person who was sending it on time, or the check was damaged. Many things can happen with the dishonored checks or RD checks. Now let's record this transaction here. Let's just play around the transaction. First of all, when the check was recorded, the original transaction, what they did, they said, okay, now we are receiving money. They debited and credited. Credited. What they debited, which was bank at the beginning, this was the original transaction, and credited debtors control. Debtors control. With 73, 50, 73, 50. This was what they did at the beginning, but now we're going to do the vice versa of this, right? Let's do the vice versa of this. How are we going to do the vice versa? Why to credit to debit? So we're going to say again debit and credit. So we have to credit here. Yeah, we have to credit here. Let's credit. Okay, let's trade it. Bank. Bank must be credited because it was debited. It's us now, correcting the above. Debtors control. So here, what we are going to write here, we are going to write debtors control. Then here, we're going to write bank here. The amount here is gonna be plus 73, 50 minus 73, 50. Then you put dash there. Then you are done with this. Then you can also, okay, when it comes to this one, just made a mistake there. When it comes to this one, you don't write it here. You write it here. You have to write it here because it's also an asset. It's also an asset. So it must be included under assets. Under assets. So this will be negative 73. 50, right? Yeah, because there's it's not an equity. This is happening under assets only because debtors is an asset, bank is an asset. Okay, let us go again now to just to do some legal accounts here. So gonna say bank just to show the effect of transaction on the bank, plus and minus. We're gonna have here, so the bank is decreasing by 73.50. Then let's just go down a little bit. Okay, so that's a bank. Then let's see the debtors control when we are doing our account. Debtors control. So debtors control will be like this. Debtors control. So what we are gonna do now? So what are we saying? We are saying debit debtors control. Debit debtors control by 73.50. So we are done there. So let's go to the next transaction. Okay, let's read this transaction. This one is very easy. Paid telephone account of the entity by check 960. So first of all, we're going to debit telephone. We are going to trade it. Let's trade it there. we are going to credit bank. Bank must be credited. Bank must be credited. The amount is 960. The amount is 960. Now in our asset and also our table there, what we are going to do, because this is an expense and this is an asset, under assets we're going to write negative 960. Under equity we are going to write negative 960. we're going to write dash on that side. Then if we were told now to open up the account, we're gonna say bank debit and credit. So this is a plus, the minus, so the minus will be on this side. Telephone account 960. Done. Let's go to the next transaction again. Before we go to the next transaction, for sure here you are gonna write here telephone account. Here you're gonna write bank. That's what I forgot there. Okay, let's just go to our next transaction. Here we are selling inventory here. This transaction is very easy, because here when you are selling, what must come to your mind when you hear the word sold? Sales must come to your mind. So we're gonna write sales. This account will be affected, but this account now, and what account? What else? It's gonna be inventory. When you're doing a sale, these are kind of affected. Gonna be bank. It's gonna be creditors control. I mean debtors control. Debtors control. So these four accounts, they usually being affected and cost of sales. You must bear in mind of these ones. But now in our transaction here, we will only record only the four of them, only the three of them, in fact two of them. So this one and this one and this one, they are out. They are not affected at the moment, because we are just given the sales amount. So here we're gonna say debit debtors control and credit sales. The amount will be 3,600. So this is the amount only. So if you were given cost price, now cost of sales will be debited. This one will be if we were given cost price. For example, let's say that maybe the cost price, they were saying that the cost price of the goods was 200 rand. You are gonna say now debit cost of sales and credit inventory if you were given cost price. But now you're not given cost price 200 rand. But now you're not given cost price. Now I'm just making an example for the future so that you may know whenever you're given cost price, what you do with the cost price. You must use that cost price over this. I'm gonna say debit cost price, credit inventory. Then if they said that sold inventory on cash, we're not gonna use debtors control, we're gonna use bank. But now it's cash, but now it's on credit, so we must use debtors control. And you come here again, you can just write your 18 there. Then here you're gonna just write the account debited is debtors control account credited is sales account is credited. Then here you must write here plus here 3,600. Here you must also write plus the 3,600. Then you are done with this transaction, the last transaction. Okay, let's do this one. The last transaction. Received a check from Mo, your 2.4. His debt had been previously written off as recoverable. This transaction is very easy. The account that will be affected here, there are two accounts. It's gonna be bank will be affected, and debtors, no, not debtors control, bad debts recovered, bad debts recovered will be affected as well. Okay, let's go. So bad debts recovered will be affected, and bank will be affected. This bank here, what's gonna happen, there will interest. Also this bad debts recovered will happen, they will interest, meaning that here we're gonna have plus 2,400 plus 2,400, gonna have dash on the liabilities. Then here we're gonna have bank must be debited, then bad debts recovered, bad debts recovered. Okay, this is how it looks in your accounting equation table. But now we must also maybe do the account. Let's do the account. The account will look like this. The account will look like this. It's gonna be bank. Say you're gonna have bank there. Open up your account. Just to do roughly, just roughly. Bad debts recovered. Bad debts recovered. Open up your account, and now, okay, debit, and then there's the credit. It's a plus, it's a minus, it's a plus, it's a minus. Remember your income, the interest on the credit side and interest on the debit side. Now we're gonna have 2,400. Then you're gonna have 2,400. This is the bad debts recovered. This is bank. Then you are done with this transaction. It was not difficult at all. It was not challenging. Let's go to another transaction again. The last transaction is as follows. It says received an invoice from Moloto suppliers for merchandise ordered 2.7. Now whenever you see the word invoice, I've told you at the beginning of this video that invoice is a credit. It's when we buy on credit from our suppliers. This supplier is our creditors control. So here what is going to happen here, it means that our creditors are going to increase by 2,700. They interest up. Then on the equity side there will be nothing, there will be nil. On the assets, our merchandise are interesting up. It means that now we're going to have plus here. Gonna have plus 2,700, right? Then we're gonna write here liabilities. A2 is our creditors control. Our liabilities is creditors control. Then on the account to be debited is gonna be inventory. Date is 15. Okay, let us just do this there. Okay, debit and credit. So creditors control. 2,700. This one is gonna be inventory. It's gonna be 2,700. Okay. Then if you are told to open up your account, you are gonna do this. Debit and credit 2,700. This is the inventory. Then for creditors control, I'm gonna say creditors control. We're gonna have debit and credit, plus, minus, plus, and minus. Then on this side, you're gonna have 2,700 inventory and creditors control. Creditors control. Okay, you are done with this transaction. Let us go to another transaction. Here we are selling inventory to B Bilangulu 3.6. When we are selling inventory, it means that your sales account will be affected. So it means that on the equity account, we're gonna have plus 3,600. We're gonna have dash there. Then it means we're selling it on credit. We're selling it on credit to Bilangulu. Then our assets at the same time will also go up by 3,600, meaning that there are two accounts affected. Debit debtors control 3,600. This is an asset. Then credit sales by 3,600. At the same time, this is equity section. If you were told to open up the account, you're gonna say sales credit plus, then debit minus. So we're gonna have 3,600 on this side. 3,600. Then if you're told to open up your debtors control account, debtors control account, this is debit side plus, then asset account. That's why I'm saying plus on the debit side, credit side minus on that side. The assets decreases on the credit side. Then it means that now you are going to record 3.6 on the debit side because the assets are increasing up. We're going to say right sales, right debtors control them. Then you are done there with the account section, and just write sales there and write debtors control account that side. Then you are done with this transaction. Let's go to the next one. So this is the last transaction that we have in our transaction questions. So we are done. Thank you very much for watching, for enjoying this video. We are going to do another question on accounting equation. Accounting equation is very nice. It's a building blocks of accounting. You master accounting equation, I'm telling you, you will master every topic that you face in accounting, because accounting is a building blocks of every topic that we do in accounting. Thank you very much for watching. See you in the next video.